Boy, that time flies when you're having fun, doesn't it? It's about that time of day again here, folks. Welcome back. Welcome back. It's Wednesday evening. It's February 27th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders earn consistent, reliable, dependable, and quite predictable profits using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my goal tonight is to identify the best opportunities we see setting up for tomorrow, Thursday morning's trading session. And tonight, we're going to cover crude oil, S&P, Nasdaq, gold, and euro. Now I'm going to jump in here first on the oil market because oil, as you know, we had the weekly inventory report today on oil. And of course, the market just slams higher with a nice strong bull run. So strong bull run tells me I want to buy, and I want to buy at levels of support. But you'll notice, though, we finished off the session today right inside of a range. Now, ranges are actually really, really valuable because trading ranges, first of all, they tell me what not to do. I don't want to buy into the high of a range. But more importantly, they give me both entry areas and exit areas that I can use to formulate my entries and exits for tomorrow. So we know we're a bullish market. We know we want to buy at support right now. That trading range tells me exactly where I want to get in and where I'm hoping to get out for tomorrow. And then later on in this video, we'll break down all the different patterns I'm going to be looking for that entry. Over on the S&P here tonight, the S&P did, well, pretty much what we talked about it doing last night. We're right back into that range. We finished up yesterday's trading session with that trading range. So the idea last night was we go one try, two try, and then right back up into that range again. So here we are, pretty much where we expected to be 24 hours ago. The problem now, though, is we're definitely bullish, but you'll notice we're right back into that trading range now. And trying to buy inside that trading range isn't really a good idea. It's a very small range. There's not a lot of space in there. So what I want to do is I want to get really one of two scenarios. Either get a pullback outside that range, and I can hopefully use the low of this hidden channel to do that. And we'll talk about these specific entry patterns in a moment. Or I also want to keep my eyes open if we do break out, right? And kind of what a breakout would look like up here, because you probably know from that right at this point, I don't trade breakouts. There's a very specific type of pattern I'm looking for, pattern and personality I'm looking for to qualify that breakout, because we have a ton of profit potential because where that range broke down, I can use that breakdown as a target all the way up for that pendulum swing up there at 28.19. So got a great plan of attack here, whether we pull back or will we blast through these highs. I'm going to show you what I'm looking for tomorrow as far as entries and exits. And then, of course, over on the NASDAQ is just like, right, its partner in crime here, the S&P. We find ourselves pretty much right back where we came from. This was kind of the plan, if you recall, from last night's newsletter. We had the trading range. We wanted to buy low, use the two-try rule, and go right back up into that range. Well, now here we are. We're back inside that range now. And again, like the S&P, I don't want to buy into this trading range right now. I don't want to trade the middle of the range. I want to see if this market can kick back out of this range. We'll look for some specific entry patterns below that range to get long. And then I also want to make sure I know exactly what I'm looking for here to qualify a breakout, right, as we try to go higher. Because again, I've got that big pendulum swing hanging out up there, up around that 7,200 big round number. So just like the S&P, we've got some great opportunity here to grab a nice big run here on the Nasdaq. I'm going to put that plan together in just a moment. Now, over here to the gold. The yellow metal, we knew we had a lot of news coming out earlier this morning. The Brexit vote, all that stuff was happening early this morning. So we were expecting gold to be a little bit choppy early in the day, and it definitely was, as you recall, early this morning. But as you can see, though, shortly after, right, after the 9 o'clock open, we really torched going lower. Get a nice strong 1, 2, 3 breakout, which definitely gives the bears that firm control of momentum right now. We're obviously a bear momentum, but we've got some challenges down here. The bears have control, and I definitely want to be a seller at resistance. But there's two big things that I see right now on the chart. One is the fact that we have a double bottom at that low. That double bottom is a really big deal. The other big deal is this rising support trend line. That support trend line is going to give those sellers a little bit of a challenge to get back down and retest that low. But we can also use it for a great way to sell as well. But really the big problem I have though is this trading range, because this trading range is going to keep these sellers from getting back to retest that low, which opens the door now for these buyers if we can get the right setup for the move going right back up into that trading range. So I'm going to put a plan together tonight on how I see the chance to sell this market. It's not going to be easy to sell it, I'll tell you right now, right? And more importantly, what to look for to start buying for that gold tomorrow morning. And then, of course, last but not least, we'll grab the euro tonight. Now, the euro looks pretty straightforward right now. We'll get a strong break up from yesterday, double top at those highs. Anytime I see a double top in a trending market, I know the day turns into a range. Now, look at that range for a second. You know, we always kind of play around in our trade room by saying that's a real well-fed range, right? That range hasn't missed any meals. It's a nice wide range. It's a large range. Now, large ranges are actually very different than narrow ranges. And I'm going to talk about how that's different and how we're going to use that difference to hopefully earn a profit tomorrow, because as you can see here, we've got a lot of space now to go back up to retest the high. And boy, if I have it my way, right, we'll use that measured move for our big runner late in the day tomorrow morning. So stay tuned on that euro as well. So we got a lot to cover tonight, right? S&P, crude, Nasdaq, gold, and euro. Before we jump in and put the plan together for the best, right, setups for tomorrow, I want to remind you, make sure you never miss a great video here at School of Trade by joining our mailing list. It's very easy to do. Just go right to our blog. All I need here on our blog at sidewaysmarkets.com is your name and your email address, and then make sure you hit that subscribe now button. Now, your job's not over at that point. Got to make sure you log into your inbox, check your email, because I'm going to send you a welcome email with a bunch of goodies that'll help you get the most out of our time together every night on this newsletter. So don't delay. Make sure you join our mailing list. That way you never miss a great video. And don't forget, too, tomorrow morning, I'm going to be in our trade room with all of our members, and I'd love to see you there with me. If you can't be there with me, the next best thing is to download all the same charts that I'll be using tomorrow in the trade room, and you can find them right below the video tonight on our blog. There's a big button right below that video where you can download all the charts that I'll be using tomorrow morning in our trade room. And then while you're down there, if you have any questions, any feedback, any other ideas for videos you'd like me to make, that's what the comment section's for. So drop me a comment below the video if you have any questions about today's topics, or if you have any topics you want me to cover in next time's video. And then don't forget, guys, right, you can always subscribe to our channel while you're down there. Give me a thumbs up if you like the video quality. And then as always, if you have any further questions, don't be afraid to pick up that phone, or if you don't want to use the phone, use that live support tool in the upper right-hand corner. Toll-free phone number and that live support. I'd love to hear from you and answer all your questions. But for now, though, let's get into this newsletter, because we got quite a bit to talk about here tonight. Tomorrow is... Yeah, that drum roll, that drum came in nice there tonight, right? Right on time. Thursday morning, right? The 28th, end of the month. We've been talking about this all week, right? Those drums came out of nowhere there. Anyways, having fun with you always here on this newsletter. Thursday evening, February the 28th, end of the month. Now, we've been talking about this all week, right? Last few drops of the month of February. It's a short month, but what do we always talk about the last bit of the month? Volatility. We're definitely expecting to see more volatility tomorrow, right, throughout the markets as traders get out of positions, initiate new positions, all in an attempt to make their numbers look good as they submit their numbers to their clients. So we're expecting to see some extra volatility tomorrow. So be aware that's what should be in store for us tomorrow. Now, in addition to the end of the month shenanigans that we always expect to see, we're going to have two big headlines to keep your eyes on. First of all is that GDP number tomorrow at 8:30. Now, the GDP number isn't normally that big of a deal, but there's one wrinkle this time. You might recall last December, we had that really bad retail sales number from the government shutdown. Well, tomorrow is one of those times where this GDP number has a chance to really surprise people. Most people think we're going to see a GDP about 2.2, 2.1. If we see above 2.5 tomorrow, these markets are going to go bananas, and they're going to really be, well, they're going to expect now this economy to keep rolling, right, firing on all cylinders. So we have one of those scenarios where we have a news event that might be kind of temporarily restrained. Look for a surprise tomorrow at 8:30. And again, anything above that 2.2 is probably going to be a worthy number for the markets tomorrow. I'll definitely be tuning in, right, in our trade room tomorrow, watching the market and how it reacts. The second thing you want to be aware of is in a few hours, we're going to have what should be, right, a pretty eventful meeting between Donald Trump, right, and Kim Jong-un of North Korea. Now, they already met once today, but tomorrow is the big official kind of ceremonial meeting. Now, it's probably going to happen before we wake up in the United States. So by the time we come in tomorrow, the markets are going to be responding to that as we go into the opening bell tomorrow. So make sure you get to that desk early. I wouldn't recommend trying to stay up all night and do it. Get to your desk early. Join us tomorrow morning in our trade room, and we'll do it together. So GDP and the summit number 2 in Vietnam are definitely going to be on our headlines tomorrow. We got Jerome Powell out of the way, Cohen's out of the way. Hopefully tomorrow can be a really, really nice, clean session with some big news setting us up at 8:30 Eastern Time. And again, don't forget, we'll be with all of our clients tomorrow at 8 o'clock Eastern Time in our trade room. I'd love to have you there with me. All right, let's jump right in. Now that we've got that introduction out of the way, we know what the schedule looks like here for tomorrow. Let's roll those sleeves up and let's get to work. Oil is bullish going into Thursday's trading session. As you can see, that nice strong bull run. But as I mentioned in the introduction, we finished that session off inside of a trading range. See, trading ranges are really great because they give me an area to look specifically for entries, and they tell me where the best exits are going to be. Knowing where to look is really half the battle. Then all I have to do is combine the entry location with the entry pattern. We don't just blindly buy at support in the bull market. I want to wait for an entry pattern. But there's one little curveball on this chart, and that is these lower highs. Now, lower highs, I draw that trend line coming down overhead. Now, you probably can finish my sentence, but there's one pattern I look for, and don't give it away if you're an experienced client of mine, but there's one pattern I'm going to look for tomorrow whenever I look at these falling resistance, right? That falling resistance, see, I want to be a buyer down in my buy zone, right? I want to buy down at support. The problem is I've got that, right? I've got that darn trend line coming up. So one of the nice ways to trade long whenever I've got a concern about a level of resistance is to use what I call a trap setup. And here's what I'm looking for. I'm looking for a nice deep pullback. And now we're going to use the 2-try failure pattern in a very specific way. I'm going to look for the sellers to try once, sellers to try twice, and I'm looking for a little trap low to get my entry. That's going to be the first way to get long as we go back up to retest those highs. I'm going to let those sellers try to sell it once, let them try to sell it twice, and then buy with that trap. Now, why is that trap low? I call this a trap pattern, right? It's also called a crown reversal pattern if you're a client of mine. So we're right on the same page there. Why is that so important? Well, again, the market's bullish. I want to buy low. I want to buy at support. The trading range tells me this area is where I should be looking for an entry pattern. But again, I don't want to buy into that falling level of resistance. Anytime I have an issue with having enough room overhead, I look for trap setups. Now, how about if we get back above the trend line? Because then I can look for another pullback, right, which I call a breakout pullback. Breakout pullback pattern, there's my second option. Now, there are going to probably be some variations of this, but these are the basic opportunities I'm looking for as the market pulls back off of that high. Now, another question I get a lot is, what if the market breaks through the highs, right? So what if we go higher here? What if we don't get that deep pullback, right? What if some news comes out overnight, and what if we just blast higher here? Well, if we really blast higher here right now, then we've got to worry about being right back up to retest these highs. So let me give you guys a little bit of a bird's eye view here. That way you can kind of see what we're dealing with here, right? These are major highs up here. And of course, major highs are where buyers will likely be taking profit. It's where sellers will try to sell off the high. And it's just really a very bad place to start buying. So if we do see the market start to make a run as we go higher here, right? If we do start seeing the market run as we go higher, I don't want to buy up here. I'm going to give you a couple options, though, on the E-minis, the gold, and the euro, where I will talk about how to buy on that breakout. But this is a scenario where we're just not really in a great spot right now to be buying high as we try to go breaking out through this trading range. Sometimes there are, but not in this scenario. So what I'd like to do is if we get this market to push through that high now, I don't want to buy high. We'll probably end up seeing a bit of a trading range up here. I'll look for a bit of a range, and we'll look for a failure pattern on the pullback. A 1, a 2, a failure. At that point, again, assuming now we go back up to retest these highs, we're going to likely probably see those buyers take some profit. And if we do see the buyers take profit, I'm looking for that pullback. I'm looking for that seller failure, right? Imagine now, right? We pull back. The sellers think these sellers have won. They try to sell, right? That next pullback, we know where their stops are. And I look for that, what I call a 2-try failure pattern. Now, we talked about this pattern earlier, but a very different type of pattern, right? We talked about that trap pattern on the pullback. We're not going to need the trap pattern in this example. We're just waiting for that 1, 2, and then we'll look to buy it after that 2-try failure pattern. Now, what if the market sits inside this trading range, right? What if we sit inside the range here? That's a valid point too, because we made all this run higher here. What if nobody takes their profit? What if it just sits here and goes sideways? Well, the good news is if it sits and goes sideways, then we don't have to worry about that trend line any longer. So if we do happen to sneak back in this range and go sideways here, that makes our job, believe it or not, a whole lot easier. And at that point now, I've got a couple different options. I can look for a 2-legged pullback, which of course, just like the name suggests, has 2 legs to it, up and over, using that trend line. I call those 2-legged pullbacks. Or we may also see, if we go back up into that trading range, we may also see your classic nested, strong move down, 1, 2, right back up, right? Let those bears try once, let them try twice, and then right back up again. So there are lots of ways we can still trade. I honestly hope we go sideways here because that'll clear out that falling resistance trend line nicely, and then we can just buy using those failure patterns below the low of the range. Now, speaking of failure patterns, I've talked a lot about them so far. I've talked about nested 2-tries. I've talked about regular 2-try failures, even talked about how I use traps in combination with them. I want to give you more information on these. And to do that, I've got a free trading course linked up in the upper right-hand corner. So grab that class. There's a link that'll pop up right on the screen there. Grab that class in the upper right-hand corner, or there's a big red button that makes it easy for you to grab the course right below the video tonight on our blog. So whether you want to go below the video or up in the upper right-hand corner, if you want to learn more about my failure patterns, or really about all my favorite entry patterns and why I love trading these markets with you guys in the trade room, make sure you grab a copy of that free trading class. Now, I know what you're thinking. What if this market reverses? What would a reversal even look like? Anytime I even think about a reversal, I always remind myself to look for what I call the 1, 2, 3 reversal. It's very simple. 1, I want to go against the trend. Not going to chase this, not going to sell it. 2, I wait for a pullback. Once I see that pullback, that's when I sell it, right? No, because a lot of times these pullbacks fail, and that's my 2-try failure pattern, right? We don't want to sell at the low. Remember, we're looking to buy down there. So what does a 1, 2, 3 reversal look like? Well, 1, strong move against. 2, pull back to the moving average. And 3, you guessed it, is a strong move off the moving average. If I see that strong move off the moving average, now I mark up my low. I mark up my lows. I find a new channel here. We call these hidden channels, and you'll learn a lot more about these inside that free class. And then we know exactly where we want to sell. I like to sell around the prior low and the top of that channel. That's my sweet spot. And we look for one of my 4 favorite entry patterns to sell off that high. Again, you can learn more about all the entry patterns along with 1, 2, 3 reversals by grabbing that free course in the upper right-hand corner or below the video on our blog. But let's keep moving for now because I want to make sure we cover as much as I can in tonight's video while I have your attention. Next up is the S&P. Now again, it always helps to know where we're coming from so we know where we're going for tomorrow. For example, you can see here, we started off the session inside of a range. And anytime I see a trading range, I look for that 1, 2 failure pattern going right back up into that range. So now that I know we're going back into that range, I really don't want to trade inside the range. It's really not a great spot to be trading, is it? Not really, right? Not a real great spot here for us to be trading. What I'd rather do is the market's bullish. I want to be a buyer. I just don't want to mess around with that trading range. So the best thing I can do right now is look for either a pullback to be a buyer, maybe off the low of this hidden channel, or look for what I call a breakout as we go higher. And those are ultimately the 2 things I want to prep you up for and get ready for us for tomorrow morning. So as we dig into this chart here now, let me zoom in a little bit closer, right? That we can get a better look here at this chart. And the most important thing at this point is how can I buy nice and low, right? How can I buy nice and low? Well, first of all, let's get this market now to pull back. If I can get the market to pull back here for me, then we set this up for a nice 2-try entry pattern. And what I mean by that is that imagine now as the market pulls back, I've got these trend lines coming up off that high. I've marked up those highs. I'm bringing it down to that low, and that creates this hidden channel. These hidden channels are really, really valuable because they kind of fool the sellers. What I mean by that is that imagine now, right? Imagine now we pull back. The sellers now think this market is turning. The sellers now, they try to sell at the moving average. And what happens? They get their stops above that high, and we can buy right into those stops. Now, once we get that long, again, we call these the 2-try failure. Sellers take the market lower because that's what they should do inside that range. We then see the bears try to sell off the moving average. It's not a bear market. We know the market is going to try to go back and retest that high. So I look for those sellers to try once, try twice, and we buy into their failure. Now, after that failure triggers, I don't want to chase the move higher because now you're trying to buy right back around those highs again. So instead of chasing it higher, I look to buy the pullback. I look for that combination of the moving average along with, right, the high we saw earlier, and that sets up for a nice entry long on the breakout pullback. Now, those are my favorite sequence, right? That kind of combination of a 1, 2-try failure into a pullback setup. Now, there are some other patterns we could look for as well. For example, maybe we see a 2-legged pullback, right? Maybe the market gives us a 2-legged pullback. Maybe we go 1, 2, draw that trend line down, use that same 2-try failure, but now you've got the ability now to use that trend line now, right, as a way in. So don't be afraid to use those trend lines, just as we talked about earlier on the oil chart. So lots of easy ways we can buy this market if we get that pullback down into that, again, trading range tells me exactly where to be looking for the best entries. Now all I need is to get this market now to pull back, let those sellers try to sell it. That way I can use their stop losses as fuel to fuel that move going higher. Now, what about if we go higher here? This is where things get tricky. I know I have a trading range right here. With that trading range, I mark up my support levels below and I mark up my resistance levels overhead. But this is a bull market. Why am I worried about resistance? And no, it's not going to be my target. I'm going to use that level of resistance because I know that sellers are probably going to try to sell it. And this is how I like to take breakouts. I like to look for a nice strong move up. Then I look for the sellers to try once. I look for them to try twice. And once I see those sellers trying once, trying twice, I look for the nice strong rally going higher. right? This is my way of trading breakouts. I don't trust regular breakouts because oftentimes the market will, well, like we saw back here, right? It breaks up, it looks good, but it comes right back down to that range again. Lots of times where the market will go up, it'll look good and then right back down into that range, which reminds me, is there any way that I could sell above that high? Yes, absolutely. Let's say, for example, right, we go up, we pull back once, twice, and we see a trap high. That is a great sell setup in a bull market. We use that strong move up. The buyers try once, the buyers try twice, and once we see those buyers try twice, it's a trap high because you're going against the momentum. That's a great way to take a little bit of a nibble to the downside in a bull market. Because again, you're selling above the range. It's a great setup, right? Definitely not as reliable as that same type of pattern on the opposite side, right? I'd much rather be a buyer at the low, but if you want to sell off that high, that's your option. Now, isn't this one really similar though? Isn't that really similar to the breakout? No, watch again. We go up, strong move up, one try, second try. Look how I'm drawing this, higher highs. The reason why the higher highs are so important is because higher highs, sellers want to sell high. So the first time the sellers try to sell, the second time they've got to sell higher. Then I can look for that buy. That's very different than a strong move up. The buyers try once, the buyers try twice, and back down. See the fundamental difference there, or the technical difference, I should say, and we're selling back down from there. Again, we're bullish. I'm looking for that one, that two, and that up from there. Now, if we can get that move higher here, what's the plan from there? Where's my target? I'm glad you asked. Remember, those trading ranges are gold, right? They're gold. They give us lots of good entries and exits. In fact, I can take the size of that break down. I can use that as the size of that break up. And my big target now overhead, up around that 28.19 and change. So leave that runner if you've got an extra contract on that trade. Now, guys, how would the market turn bearish? It turns bearish by looking at the 1, 2, 3 reversal. 1, strong move down. 2, pull back to the moving average. And 3, strong move through. If I can get that strong move through, then I can find my new channel. Then I can mark up that low. And then I can look to sell at that sweet spot. Where's my target? Target is pretty easy at that point, right back down to that 27.75. So nice, easy plan there on the S&P. Just don't get caught buying high in tomorrow morning's session. And don't forget, tomorrow, 8 o'clock Eastern time, we're going to do all this together, right? The markets can definitely be complicated, and it really helps to have a coach, right, or some guide to help you on your way. Now, another great chart. Here is the Nasdaq. The Nasdaq looks very similar to the S&P, and it definitely is. We started off from yesterday's session, and again, it's always important to know, right, where we were so I know where we're going tomorrow. There's that trading range. I take the amount of that range, bring it down, the amount of that range, bring it up. There's my big target for tomorrow is that 7,200. Now, as we zoom back in, I don't want to trade inside this range. This range is really small, right? That's a real small range. And remember, right, that top of the range up there, that's major resistance. So I don't want to be buying here. Not a great spot to be a buyer. But man, oh man, look at that move. That is one heck of a rally for those bulls. A short covering rally, as we call it, after those sellers got run over and back in. Anyways, we know we have some nice, strong, bullish momentum. What does bullish momentum tell me? It tells me to find a level of support. Well, where could I find levels of support? There's a trading range right here, right? You can easily see we go up, we go down, we go up, we go down. Trading range. Mark up that range, bring it down. What does that do? That tells me precisely where I want to get in. Now, all I have to do now is wait for the pullback, right? Now, also you can see here, I'm also drawing a trend line off those lows, right? And that creates this hidden channel. Now, I like to cheat a little bit. Personally, what I like to do is I like to find hidden channels that reinforce the area that I'm already looking. I'm already looking down around that 7,100, and boy, that hidden channel really reinforces that area. Now, I know what you're thinking, but what about this channel, Joe? Isn't that channel a valid place to be buying? Well, here's the problem with skinny channels. These really narrow channels, they almost always produce a real deep pullback. Why? Because there's no space inside these channels, right? There's no space inside there. It's very difficult to convince an experienced trader to buy the low at support when there's only a very small target waiting overhead. Again, you're right at the top of the range. It's a very narrow channel, right? See, if I wait for a deep pullback, again, I'm not denying this channel. All I'm saying is usually when you see a real skinny channel, right, it's going to pull back. Why? Because nobody wants to trade with small profit targets. They want the big targets. And that's what those big, wide channels give you. Same thing when it comes to wide ranges, right? We're seeing a good contrast here between a very narrow channel, skinny channel, right, and a wider channel. If I see a real narrow channel, well, that's great. I just know I'm probably going to get at some point some really deep pullback, right, when I see those little skinny channels. Okay? And yeah, sometimes those channels will last for a long time, right? I always wait for the pullback because for me, I want to trade those low risk, high reward trades. For me, I want to risk small to earn large. If I'm trading inside of a small channel, yes, I'm risking small, but I'm also earning small. And usually that only attracts the rookies. It doesn't attract the big fish in the sea. And the big fish are the ones looking for those big, right? Those big bait, right? To get a big fish, you got to have some big bait on the hook, don't you? Right? And the big bait is that big wide channel. So that's a very good point there if you're wondering about that, right, that hidden channel. So we know now we have the combination of the hidden channel, right, along with that range expansion. And now you kind of know what I'm thinking when I see those little skinny channels, right, on the chart. So the plan is very similar to the S&P. I'm hoping that we get a nice deep pullback. I hope when we see that pullback, I hope we get those sellers to sell off the moving average. Because if I can see those sellers try to sell off the moving average, now I know exactly where their stops are. And I can use my two-try failure pattern to buy right into those stops. Once I see those sellers get stopped out, I can buy right into those stops as it goes higher. And then don't forget, don't chase after it, right? Get that pullback and buy it from there. We don't want to buy high. We always want to buy at support. One of the things I'm always harping on with my clients every day in the trade room is don't chase, don't chase. In fact, I'm sure my clients probably hear my voice in their dreams at night saying, don't chase it, because it is one of the more difficult things to get your emotions under control as you're a rookie. And that's one of the things we work hard together in our trade room, which is another reason why our clients like to trade with us in the trade room. So that's the plan as we pull back. And again, there are a lot of variations of this, right? We might see a two-legged pullback, right? Very, very common for a market to go one leg, two leg, and then incorporate that two-legged pullback along with that failure into that pullback pattern, right? So these patterns stack on top of each other all the time, right? So it's a two-legged pullback, it's a two-try failure into a breakout pullback. They kind of stack on top of each other. We don't usually see all three of those. Usually we'll see two of them, right? Maybe we get a two-legged pullback and a two-try failure, right? Or maybe we get the breakout pullback, right, after that two-legged pullback. You know, we don't always get every single pattern. I'm just telling you where I'm looking and the specific fundamentals of those patterns I'm looking for. And again, if you want a much deeper dive into all of these patterns, check out that free course in the upper right-hand corner or below the video tonight, and you'll love that free course content. Now, what if we go higher here? And remember, if we go sideways here, nothing changes. If we go sideways here, nothing changes. We're still looking for that one, that two-try failure, that up, that back, and that go. Same basic pattern, right, if we go sideways. Now, what if the market tries to break higher? Remember, the trading range tells me I've got resistance up around 71.42. So I'm looking for is a strong move up. I got one of two patterns. The sell pattern is the 1, 2, right back down. Let the buyers try once, let them try twice, and sell right into those buyers' stop losses, right? Those poor buyers buying right into the high of that range expansion. Okay, that's a sell. Again, not as lucrative usually as a buy going with momentum, but that's the option to gamble to the downside for tomorrow. What I'm looking for the buy here is a strong move up, followed by a 1, a 2, and up we go from there. Let the bears try once, let them try twice. Most people, most human beings, think about the people you know in your life. How many people do you know that will give up after 2 attempts? Do you know anybody in your phone right now, anybody your close friends that will be, they'll try 3, 4, 5 times? If they do, they're probably really successful in life. They probably have a great family, right? Lots of friends, and probably a big bank account too. Because it's very rare in the world we live in for people to try things more than twice, right? Take me, for example. I almost quit trading after I blew my second trade account. It wasn't until I actually borrowed the money from a friend to fund my third trade account that I finally took risk actually seriously. I'm one of those people that for some reason I have no problem throwing my own money away, but once I have somebody else's money responsible, right, I tend to shape up, and I did pretty fast. But the moral of the story, though, is that not many people are going to try things 3 or 4 times. And wouldn't you be amazed that markets are just exactly the same? The sellers will try twice, right? And once they try twice, most of them will hit the reverse button and they'll start buying. They'll flatten their position. They'll get out of their shorts, which of course sends the market going higher. And again, where's my target here now? Target up around that 7,200 for that runner. So really, really great setup here on the Nasdaq. I hope we get something here on the pullback. But if we don't get the pullback, at least we have a good plan, right, going higher with that strong breakout. All right, let's keep going. Now over to the hard chart today. This is the one that's going to test your patience tomorrow on the gold. Now, first of all, we've got some big GDP news tomorrow morning, which means gold could be a little bit sleepy here in the overnight session. So promise me you're not going to force trades in the gold market in the overnight if we're not seeing it move very well. GDP 8:30 tomorrow. We may see the market sit quietly. We just don't know yet, right? We don't know yet. So if it does go quietly, don't force it until early tomorrow morning once we get that news to come out. Most important clues right now is the bearishness. The market is bearish. It's going to bear momentum. Bear momentum tells me sell at resistance. Now, where can I find levels of resistance? Well, I've got a trading range down here. I have a double bottom. Anytime I see a double bottom in a bear market, I know to call that a range. Ranges tell me where I have resistance overhead and where I can look to be a seller. They also provide me with support below where I can then look to be a buyer, right? Taking profit on my sells or looking for a buy as we go. So the trading range definitely identifies some key turning points that I can use for entries and exits tomorrow. Well, then we have that curveball and we have that rising support trend line. Now, the market's bearish, so I'm looking for levels of resistance. That might be a support trend line for now, but I'll bet if we can get below it, we could use it as a level of resistance. And that ultimately is what I'm looking for here to be a seller tomorrow. There are really a lot of different possibilities here, both buying and selling on this gold. And that trend line really puts, I would say, the seller's feet to the fire because it really makes them focus right now. Another thing that's very concerning here is that if I remove this, you'll notice that the actual low of day is done at 1318.4. Now, why am I mentioning this? Well, because anytime we have a strong move in one direction, we always know the sellers are going to try to go back and retest that low. Why is that important? Because this trading range you can see me drawing here, that trading range gives me major support at that low. Why is that important? Because remember, the sellers, they have one mission right now, and that is to get that two-legged pullback and a retest of that low. But they're going to have a hell of a time getting through the low of that range. So that's a really big clue. In fact, when you put this together like this, the rising support trend line that requires the sellers to get underneath it before they can sell, in combination with that really challenging range low here at 19.7. Again, the reason why it's such a big deal is because it's a significant level of support standing in the way of those sellers. So we could easily see this market go up, bounce off of that low, and then we have this almost a guarantee rising support, and this thing's going to almost guarantee to go right back up again. So the moral of the story is that yes, we are bearish, but seeing the rising support trend line and seeing that, again, it's not a huge deal, but it's a very big clue in my eyes, because I've seen this happen time and time again where you've got that low of day, the sellers, they try to get down to hit it, they bounce off that range low, and now, right, buyers come in attack because they know now it's a higher low. And with that higher low, it creates that rising support trend line, and the sellers just can't get through it. It makes those bears pretty much give up, and the market oftentimes reverses. So there's a whole lot of opportunity here to be a buyer right now. Looking at this chart right now, I was tempted to say, don't even think about selling this market. But let's be honest. It's a bear market. I don't want to just blindly say buy this market, because there was a chance that these bears, may hold on to it. Now, let's get rid of this. This was the overshoot I was watching earlier, but I don't think we need to talk about it here, because the range does all the stuff that I need to tell you here. Now, with that said, how do we buy it? But first of all, how do we sell it? What does a sell look like? Well, really, it all comes down to how the market pulls back. What you're looking for is you're looking for this market to go up, to give you that two-legged pullback, then go over and sell off that trend line. Now, when it does this, make sure you know the proper entry trigger. We're looking for that move up. It needs to pull back to the moving average and then close strong right below the moving average. We've got to see that strong close. So what I'm not looking for here is I'm not looking for a 1, 2, and then something like this, right? A red candle that can't close below that moving average. You see that red candle stalling out and closing above that moving average, that's not good. That is not good for those sellers. I wouldn't say it's a buy signal yet, right? But I would definitely say that we need more information before we can even think about being that seller. So in other words, we've got to see a real strong move coming off that trend line. That will give me the green light I need now to sell, going back down to retest that low. Now, we may have, this may not even be a problem if this market turns and goes sideways. So if we sit here going sideways, now that trend line is a moot point. It just disappears, right? So if we go sideways here, right? If we go sideways here, now that trend line is gone. It doesn't matter. Now we use that same two-try failure we talked about earlier on the other markets, right? 1 try, 2 try, sell back down. Okay, not as necessary to get that king candlestick, right? We don't really need that strong close on this one. We just need to know where those stops are and to sell right into those stops. And again, we call those the 1, 2 try failure. All right, guys? So if we do go sideways here, just keep your eyes open, right? We'll look to go up top, 1, 2, and then sell it right back down. Relatively easy idea there. Now, that covers the sell side here. What about the buy side? There are quite a few different ways we can buy this. One way would be, let's say we go up all the way back down. We go into that 13, 17. Remember, this is a range, right? So ranges give me place to get in, place to get out. One of them is that 13, 17. Let's say now we go up, we come crashing back down. Can I buy down here? Oh, yes, you can. I'm going to use the 1, the 2, the nested 2 try, right? The 1, the 2, and the nested. Let them try 1, let them try twice. Once we see that rising support trend line, bingo. Now we know, let those bears try twice, and then whoop, right back up into that trading range. I love those buys. Those are my favorite buying opportunities in a bear market. Let them finish the job. And then once those sellers tie that noose right around their neck, we yank it, right, and pull it right back up into that trading range. That will take some time. We'll have to wait on that. The other option here is I'm looking for one of two scenarios as the market runs. Okay, first scenario would be the short covering rally. If we see a short covering rally, and a short covering rally has a very distinct personality to it, it's very sharp. A short covering rally is very, very sharp because nobody's selling it, nobody's in the way, the bears are getting out, and this thing is ripping higher. When you see a short covering rally, you have a very small window to look for a trap off of that low. This will be the best entry if you can get into it early. Again, it's got to be a very strong run higher, right? It'll go up, shallow pullback, up, shallow pullback, up, shallow pullback. The shallow pullbacks are what give it away as a short covering rally. In that situation, now that trend line becomes a lifeline for those buyers. Again, strong move up first. That's the key to that setup. Now, if you cannot, right, if you can't get that, or if we don't get that short covering rally, right, if we go up, deep pullback, we go up, deep pullback, this comes that similar breakout pattern now, nice strong signal, I can look for that two try failure, 1 and 2, going back up into that range now. Again, these will look very different, right? The short covering rally will be very aggressive. Right? This one will go up, the bears will come in. You'll see a nice deep pullback. They'll do it again, right? Nice deep pullback. Okay? It's very different than a short covering rally. Short covering rallies are sharp, they're aggressive, they don't give you very deep pullbacks. If you're seeing deep pullbacks, those are sellers trying to sell into this move going back down. Let them try twice. Again, how many people do you know that will try things 3 or 4 times? Most people barely even try once in life, right? And that's why being successful is relatively easy if you just don't give up. Try 3 times, 4 times, right? That's been my secret to success, right, in my life. So bottom line is those are some buys. Now, as we go higher here, if you can't get into that short covering rally, don't chase it. You got to get in early in a short covering rally. If you don't, then you want to wait now and look for that deep pullback. 1, 2, failure, and back up. So you've got to get in early in the short covering rally or get in late. 1, 2, and then over we go. We talked about that last night in the newsletter, right? Short covering rallies are very exciting, but you got to get in quick. If you don't get in quick, you got to wait for that deep pullback. You know, think of it this way. A short covering rally, which runs higher, eventually pulls back into a larger channel. We talked about those skinny channels, right? Those skinny channels, right? Those channels who are intermittent fasting, right? I'm kidding with you, right? But you know what I mean, right? Those channels that are really tight, right? They get the skinny jeans on. I'm having some fun with you guys. Could you imagine me in skinny jeans, by the way? Anyways, then once we see the market really high now, right, I don't want to buy up here. I want to buy that pullback, right? Most of the time, those skinny channels, they'll eventually pull back, and that's where we want to find an entry from there. All right, we've covered a lot here tonight on the gold. We'll do more tomorrow, right, in our trade room because I am running late on time here as I watch that clock. How about some euro? The euro, forget about skinny jeans. How about a wide, right? This is a wide leg range, right? This is a relaxed fit, right? This is a relaxed fit range, right? This is the cowboy range. The bottom line is we know the market in the euro is bullish into that trading range, right? I want to buy at support. I want to buy below the low of that range, and I'm going to take my profit up at the highs of that range. We also have that falling resistance trend line coming down. And as you learned earlier, those levels of resistance can really be a pain in the butt, but we can also use them as our best ally for buys going back up on the opposite side. So now that you know the basic ideas there, let's clean this thing up here. That way you kind of know what we're talking about here. Because I want to talk about kind of the polar opposite of what we saw earlier. We were talking about narrow ranges and skinny channels. This is a really wide range. Now, I talked earlier about how I like to take the size of that trading range and project it up to get resistance and project it down to get support, right? The size of the range creates resistance. The size of the range creates support, okay? Now, sometimes sometimes the range is really wide. This is a pretty wide range. And you may have noticed that I actually cut that range in half. And I used a half to project down. So I use half the range to project lower, half the range to project higher. So if you're wondering, right, do I have to use this big range expansion? No, right? We almost never use a full range expansion when the range is really, really wide. In fact, if you recall late last year, we had that huge range on the S&P, and we actually used the thirds, right? We broke into thirds and used thirds of the range. So the wider the range gets, and wide ranges are relatively rare, but the wider that range gets, the more we break up the range to find levels of support below and find levels of resistance overhead. So you guys already know the basics of the range. Buy low, sell high, avoid the middle. I want to buy low, I want to sell high, and I want to stay out of that middle, because the middle, especially in a wide range, is really, really choppy, because the bears are selling off the highs, the bulls are buying off the low, and there's this kind of like zero gravity, right, inside the middle of that range. You can really see how choppy that market will get inside that range. So at this point, we're down around the low of that range. It's a bull bias. I want to be a buyer here on this euro. How do we do that? Well, the key here is that trend line coming down. I've already got my first try here. The next thing I want now is a second try to buy off that low. And honestly, what I'm going to be looking for is a move up, a move down, get that moving average coming over, and I'm going to combine this with a two-legged pullback along with a two-try failure into pullback and then over as we go. So again, it's a two-legged pullback, right, into a two-try failure, and of course into that breakout pullback. Draw that trend line over, right? That'll give you support to buy off of. Now, just some words of advice on these two-legged pullbacks. Okay, because a lot of times we end up seeing in these wide ranges is it'll grind lower. Okay, a grinder, you don't want to try to pick which of these to buy off of. What you really want is you want this thing to go up, over, and then buy, right? You almost want this to look like it's going to crash as it goes. So just a word of advice, be very careful trying to pick a grinder, right? We call them grinders, whatever you want to call it, right? I want to see it go up, over, and then in, right? Not the just up, grind, and down, because it's almost impossible to tell which of those tests is the one you want to buy. So just be aware of that. I want to go up, over, and then again, get that trend line, get that moving average, and that will set up for, again, same patterns I've talked about a million times already, same patterns covered in that free trading course. But again, the free class will go over all the nitty-gritty details of the technical analysis, what I'm looking for to get in, right, and get out of my trades. So that's the idea behind, right, or the low of that, right, of that range. Now, as we go back into that middle, right, if we go back into that middle and nothing pulls back here for us, stay patient. One try, two try, failure, back up in. As we go higher, be ready for a possible real big run higher. As we go higher here, 1, 2, buy back up. That same 1, 2 try failure. Or if we really run, then we look for the sell. Once we finish off that big measured move, once we get up into that top of that range expansion, then it's the 1, 2, we call that what? The nested two try. Let those buyers buy the pullback once. Let them try twice. Buyers want to buy low. Once they fail after the second time now we look for that nice big strong signal. We know where stops are, and we're selling as it collapses back down. Now, what would a breakout look like, right? What would a market look if it broke out of this range? We talked about the 1, 2, 3 reversal. It's the 1, 2, 3 breakout. If we see it up, pull back and run, that's my idea now of a breakout. 1, 2, buy the low, and we're off to the races. And because it's the euro, 15,000 is that next big round number. Looks like 14 and change up here, 14,800 is going to be that next big milestone. Yeah, so if we can break out, look for that breakout pullback, look for that 1, 2, 3 breakout. But again, right now, I'm focused on buying off of those lows. Boy, oh boy, what a great video tonight. I hope you learned a ton. I hope you use it to earn a ton, right? Remember, to get the big fish, you need the big bait, right? Look for those big, low risk, high reward trades. Stay away from those skinny channels. Well, don't stay away from them. Just be aware those skinny channels almost always give you that deep pullback. We'll use that tomorrow in our trade room. And speaking of which, don't forget tomorrow morning we'll be alongside all of our advanced members here at School of Trade. We always execute the strategy together every morning, elbow to elbow with all of our clients. Come join me tomorrow morning as a brand new advanced member. You can learn more on our website. Call me anytime you have any questions. I still use a telephone to actually talk. So you call that phone, I'll pick it up. No robots, no auto robots or anything on my website. I look forward to speaking with you to answer all your questions. And don't forget, if you want a free pass to come join us in the trade room as a guest, grab that free trial. With that free trial comes your free trading course along with that free pass. Come join me as a guest in our trade room. Guys and gals, thank you so much for spending your time tonight. Kick some butt tomorrow, the last few drops of the month of February, and then we are into the month of March. One of the best months of the year. I can't wait. But we got to make some money tomorrow first, though. Let's finish up tomorrow first. We'll see you guys tomorrow at the opening bell. If not, same time, same place tomorrow night. All right, it's a deal. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.